Ladies and gentlemen, welcome, welcome. I hope you are enjoying your dinner. In the first session, just before the main course, Enrique was talking about Angola's manufacturing. We're going to broaden that just a little bit and take it to the rest of Africa. And like you saw in the chart that was played earlier, manufacturing in 2011 was, in 2020 was at about 11% of sub-Saharan Africa's GDP, and that compares with about 16% in the 1990s. Though the value has gone up, almost 200 billion, the pace has really slowed. In fact, in 2020, we saw a contraction. Intra-Africa trade is at about 15% of total exports. Untapped export potential in sub-Saharan Africa is at least 20 billion. This points to low manufacturing concentration within Africa. It is something that national governments, regional blocs, and now the Africa Continental Free Trade Area is trying to reverse by investing in industrialization and facilitating trade. Dangote is developing one of the world's biggest oil refineries in Nigeria. Coca-Cola has several plants near lovers of its beverages across Africa. And I'm hasten to add lovers of the current taste of its beverage. And politicians, at every opportunity they have, really promise to expand or build new factory capacity. So will the dream of Factory Africa be realized soon, or will it continue to stumble at new challenges such as the pandemic, climate change, and geopolitics? With us today, we have an esteemed panel. Lloyd, the Chief Impact Officer at British International Investment. It has a portfolio of about $7.1 billion, and it is involved in about 608 businesses in Africa, 480 in Asia. And then we have Liz. And then we have Marco Serena, who is the Head of Sustainable Development Impact, the Private Infrastructure Development Group. It has 4.4 billion committed infrastructure projects and has mobilized more than 35 billion from private sector and EFIs since 2002. Welcome, Marco. Thank you. And last but not least, we have Maher Jarmakani, the Chairman and CEO of Jagal and its wholly owned subsidiary, Nigerdock. Jagal is the Nigerian conglomerate which has exposure in energy, logistics, maritime, technology, as well as fast-moving consumer goods. It employs over 5,000 employees, all concentrated in Nigeria, and has over $300 million in revenue. So you're most welcome, Maher.
Thank you.
I would like to start with Liz. I mean, over the years, national governments, regional blocs have drawn industrialization master plans covering processing of oil, metals, import substitution of items such as foods and textiles. In your time, having lived and worked in Africa, done business with governments and businesses in Africa, how have you seen this journey evolve of industrialization of Africa, especially now that we have these emerging challenges and new challenges of the pandemic, conflict in Africa and outside Africa, but affecting Africa? How have you seen this journey evolve?
Well, I think it's been mixed, to be honest. I mean, we've certainly seen some very good examples, but I think your framing is exactly right. It is about government and business, and you need both sides. You need the enabling environment of rule of law, of sort of stable tariffs, of that kind of predictability, and access to finance, all the things that we know, access to power. I mean, how often are power outages and downtime the reason that you can't build a kind of a growing business? But in addition, now you need internet connectivity. You need kind of the supply chain and the global demands, if you're exporting, mean that your kind of responsible investing standards need to be tip top, because you're going to want to appeal to that wider market outside your own area. And I think there's both sides on scale. I think new manufacturing and new technology and kind of more modular developments mean that you can see the potential for kind of domestic manufacturing in smaller kind of settlements, but you also need the scale to be able to kind of aggregate and create those markets for kind of export, whether that's kind of within a country or in the region. So I think it's a little bit of a complicated picture. You need like a lot of things to go right altogether for it to really blossom. And we are, as you're seeing a few setbacks. We see a few steps forward and then a few setbacks. And unfortunately, COVID has been a little bit of a setback for the continent in the development recently.
And Marco, from your experience as a funder of infrastructure, to support industrialization in the low-income countries where you operate, talk of Malawi, Zimbabwe, and so on, can you say you've moved the needle?
Well, it's difficult to say if we move the needle for the continent. I think we need, the African Development Bank is saying we need 100 billion investment a year in infrastructure to bridge the infrastructure gap. And so there is a lot to do, but clearly if you look at those amounts, it cannot come from government alone. It must be private investment as well as government. And we've been trying to do this over the years. So as you said, 20 years ago, the first of our companies was set up, Emerging Africa Infrastructure Fund, with a mandate to do low-income countries. And 20 years later, the fund that has started with government funding is able to attract banks, institutionals, and it's profitable. And the default rate is in line with other funds. So I think there is a story there of success of investments in the infrastructure sector. It is difficult. It takes, our experience is that it takes longer to develop infrastructure in Africa than in other countries, and it is often more expensive due to the groundwork that first movers have to do, but it is possible. So you mentioned Malawi. We've recently we just invested in the first independent power producers solar plant, 75 megawatt utility scale, and it's operational. Our the second one is about to go to operation again. Our hope is that this will move the needle, and that by showing that a PPA is viable, that more will come into the infrastructure space, and that is closely linked to manufacturing, because you need different pieces, but you certainly need to power industry, you certainly need to move goods around, and so that infrastructure is crucial.
Maher, since you're on the factory floor, could you paint for us a picture of what manufacturing is currently, not just in Nigeria, but in Africa, really in comparison to some of the other regions?
Well, Nigeria and a lot of the West Africa region, which I'm mainly focused on, a lot of growth coming in, so a huge pressure to create employment opportunities, take advantage of local resources, steer away from the use of foreign exchange. And a lot of the governments in West Africa have taken a similar line, where they want to develop and promote local manufacturing. It comes with a lot of challenges: access to finance, the logistics, the infrastructure to move goods around is a big issue. The right scale of seaports across the West Africa region, which I mainly focus on, is a bit of a challenge, but improving. And actually, the last 10 years has seen significant growth in the manufacturing space. The difference, I would say, between manufacturing in Africa versus the rest of the world is the amount of things in terms of areas of risk that have to be managed while scaling a business in the region. Things from looking after the right scale of power, access to electricity, stable, reliable electricity, security, the movement of goods, the requisite amount of logistics apparatus that moves your goods around the continent is a big challenge. And there's a lot of barriers to moving goods across borders. So scaling a business in regions of Africa, whether it's West Africa, East Africa, is hindered a lot by infrastructure that is aging. So you've got a mix of huge opportunities and growth and potential, but hindered by a lot of infrastructure problems that need to be resolved.
Okay, I mean, Nigeria is Africa's biggest economy. South Africa is the most industrialized. And when you talk about power, that's really the sticking problem. If you had, Liz and Marco in a boardroom and, you were pitching, is this what you would present as the biggest problem?
It is. Number one is reliable power. And number two, I would say, is infrastructure. Those are the two key components to scaling a manufacturing sector in the continent. And we've seen this theme rise up and again in all the areas of manufacturing, heavy industry, light industry, and it's a big barrier to growth.
And Liz, when you listen to entrepreneurs, investors like Maher or governments, and you listen to this long list of challenges, not just from power, but FX, transport of moving goods, the interconnectedness. Do you see opportunities or you see something insurmountable?
No, certainly not insurmountable. And, we too have invested hugely in the continent over the last, 10 years in the last year. And there are some really good success stories, whether it's in Indorama. I mean, you will have many, probably more success stories around your tables than I can kind of quote. But, that was, Nigeria, from importing a huge amount of fertilizer, is now, this was one of the first and efficient plants at, in the manufacture of Euro-based fertilizer. So that's, there are some really, and that's a very sizable project. So there are some very sizable investments. And I think on the sort of interconnectedness side, I mean, whether that is from the sort of, liquid telecoms, the sort of interconnected kind of sort of fiber, telco, data centers, the sort of modern economy, or the infrastructure, power, renewables, and the sort of decarbonisation journey, there are many people, including us DFIs, financing this transition to a sort of a newer, cleaner economy. So, I mean, we have dollars. We find great opportunities to put to work to create that more stable environment.
Could you take us through, some of the existing and emerging themes such as climate change, ESG, and how those play into the industrialization journey in Africa now and in the foreseeable future?
I mean, I think climate change, both from a kind of protecting, a kind of de-risking perspective, is increasingly important. I mean, we would always do kind of due diligence on future investments from a kind of transition risk point of view. How resilient are they going to be to future climate change events? That protects our money, any other private investors that we mobilize. And from a kind of circular economy point of view, there are great opportunities. I mean, Malawi is a flavour that has been mentioned before, but we have invested in 14 Trees, which is a partnership with Lafarge that creates low carbon bricks, so moving away from kind of clay-based bricks, and on average saving 14 trees per house built. So I think there are kind of both at sort of the kind of innovative, kind of interesting end, and at the sort of large scale end with kind of Bemban Solar or these huge sort of power projects. That there are huge opportunities to sort of support the transition to a low carbon economy for many, many investors.
And how is that playing out so far?
So far? So far, fine.
Okay. Look, Marco, given the huge infrastructure backlog, you just mentioned that huge figure of 100 billion, and there's frankly not a lot of money, and there's a lot of competition for whatever money is available. What are some of the key factors you consider in your capital allocation, and even the countries you decide to invest in?
So we are in a particular position because of our mandate, and we're effectively an impact investor. So we got a mandate to operate in countries where infrastructure will deliver the most benefits, or we hope it will deliver the most benefits, or bridge the gap for people to to move towards achieving some the sustainable development goals. But what we're looking at in any country is how crucial that piece of infrastructure is to the economy of the country, and how important that will be to the businesses and to the fabric of the country. And that is ultimately a key test for any investor, because that will then ensure that we can navigate changes of government that were talked about before. We can navigate the risks, because in the long term, that project is needed and makes economic sense for the country. And so I think that will be, that will be one of the first tests that we're looking at. The other thing is, can we make those projects investable to high standards? So you're saying there isn't a lot of capital. It's true, and capital is impatient, but at the same time, there is capital available, and there is more willingness to invest in emerging markets than there was before. One of the issues is, how do you bring projects to the standards that are needed for these investors, and how do you demonstrate that you can go beyond the risk? So one of the things that we had to create is a project development arm that invests at the equity stage and takes huge risk. It's risk capital. In order to bring those projects to a level in which they can be investable through that. And the other key tool is using guarantees in a clever way in order to stimulate or maybe extend the tenure of the lending that is available, which is crucial to some of the projects that we're working on and involved with.
Okay, and can I specifically ask you, which are some of those sectors and industries you're, backing or pushing? Because economies are changing. We are seeing a lot of emphasis of industries of the future. Energy transition. But on the other hand, we see lots of new risks, emerging. We didn't know that there would be a war in Europe, for instance, and then besides the war in Europe, there are also, conflicts just within Africa itself, in the Sahel, in Ethiopia, in the Horn. Given these new emerging challenges and, climate change and ESG, which Liz just talked about, what are those industries that you're betting on?
So as an infrastructure investor, we keep working on energy for about 40% and transport for 30 to 40%. So we've invested in border posts. We've invested in water transport for example, on Lake Victoria, one of the first scheduled ferry services for goods. And we see that as an area of growing expansion. But then if we're thinking of what type of industries can we support, then we're really looking at the industry of the futures, as you're saying. So rather than thinking producing cars, can we assemble electric vehicles pieces on the continent, for example? And we had a couple of initial investments, and we're looking at that. Can African countries manufacture solar panels in the future? It'll be a long journey, but they will be needed. So I think it's also... and then obviously there's the agribusiness, the agribusiness sector, and so the idea is looking at the regional market for goods, starting from food to consumer goods, and then if you look at the international market, look at the industries of the future. I think everything related to the energy transition are things that Africa could be well placed for. But it needs a huge sum of investments into the basics of the infrastructure again.
And when I've had this conversation, lastly from you, Marco, the question that again comes up is, creating resilient value chains, given the disruption that again these challenges have really brought about. There's a time parts could not move, so factories had to basically shut down in parts of Africa. In some places, exports could not move, so programs like fighting desert locusts had to stop because exports or chemicals could not move. Is this something that you look into and have a strategy while you invest in these countries?
Well, again, we think that the investing in infrastructure that allows energy in different forms to go to businesses, goods to move across water and across roads, and to do all of that in a way that is resilient to the big changes in terms of heat stress and extreme weather events, etc., is key. And what you're describing is, we're facing huge disruption of supply chains globally, and certainly it is really difficult to, for example, for us to even honor all our work on and contracts on the the EPC contractors for solar panels, for example. But then at the same time, resilience can only be strengthened if more is produced locally and there are regional hubs. So I think the hope is that you can you can work around some of the key hubs on the continent and build on those really.
Maher, many manufacturers, in Africa, and investors and governments have really talked about the Africa Continental Free Trade Area and the opportunities it brings, not just in production, but also, improving livelihoods of a quantum of Africans. Do you share that view, and are you working toward tapping these opportunities?
I do. I think there's a lot of work to be done with the Africa Free Trade Agreement, and it goes hand in hand with the infrastructure challenge that we're talking about, because the movement of goods is an issue of fiscal policies, but it's also an issue of efficiently moving goods across continents and removing those barriers, whether they are physical barriers or barriers to do with customs, ports, tariffs. These are big challenges that actually face the continent. You've got 55 nations across the continent, over $3.5 trillion economy, but the most trading that most African countries do are with non-African countries. And to improve or to shift that paradigm, this Africa Free Trade Agreement is necessary. There's a lot of capacity on the continent for turning raw materials into manufactured goods. A lot of it happens outside of the continent, and I think with the right incentives, not only for manufacturing, but to invest in the infrastructure around manufacturing and the needed supply chains, are going to be helped by this free trade agreement. So I see a huge potential behind it.
Liz, what do you think about this vision for the free continental area?
I mean, I think, as Maher was saying, it does have a huge amount going for it. I think being able to transport cross borders obviously increases the sort of scale and the sort of opportunity on your doorstep, as it were. And I mean, it's completely right that the kind of supply chains at the moment are not all at all intra-African. I mean, we're really looking at there's huge amounts of potential there. I mean, I did also want to mention one other area of kind of, I guess, potential that I think is quite interesting, and we're seeing a lot on the continent, which is the sort of the emerging VC and kind of tech industry. And I think there is a kind of potential of the kind of linking up of, I guess, the traditional manufacturing and the tech, and creating platforms which we're seeing kind of elsewhere, which really start kind of connecting those businesses via tech to create larger kind of platforms. So I think combined with the kind of Africa fair trade area, free trade area, if you're finding basically better ways of communicating and linking up disparate businesses with that kind of enabling environment, then you've really got a really sort of potentially good partnership together.
Okay, we're now going to move to the last statement since we are running out of time, and I'll start with you, Marco. What you see, what your vision is, for Africa, and if you think that the funding backlog for Africa will reasonably reduce, and when you think that will happen, and most importantly, how that will be made to happen.
I think it's difficult to put a date to it, but I think the opportunity is there. There's I think the key thing would be to ensure that there is, the incentives are there to develop projects on the continent, and to have a reasonable amount of money focused on that in particular. I think one of the ways to bridge that infrastructure funding gap is to leverage the money that is on the continent in the pension fund of the big, for example, of some of the big countries from Nigeria and others. And to think about some of the local currency solutions that are needed on the continent as well. But I think there is the opportunity there at the moment for Africa to be part of the energy transition, and on the focus on overall focus that there is on climate.
Maher, despite all the challenges, as you give your last remarks, could you tell us what keeps you going?
I think the potential, the growth, and a vision for an Africa that is much more self-sustaining, higher levels of employment, and targeting levels of, I would say, output that meets the targets set out by our governments. These are very important targets because there's a huge population that relies on it, and you feel in the situation that we are in let's say in Nigeria and the West Africa region, these targets are extremely important. There's a huge reliance for increase in employment opportunities, use of our resources, more stability in the political and social region, and this gives us a point of purpose that we play a very important role in this trajectory, and we think we've done a great job today in our group. We're a very diversified group, as you mentioned, in the energy, in the FMCG sector, in the tech sector, and we hope we can add a lot more to it. So that sense of purpose is very important to us.
Thanks. And Liz, as you have the final word, where do you see manufacturing in Africa in the next 5 to 10 years?
Goodness. I mean, I'm afraid I don't know exactly. I think, though, that a lot of the, we can concentrate on some of the challenges, and we should do, because they're real, and unless you identify them, you don't tackle them. But, education levels are higher. Despite the fact that power is still an issue, it is better. Logistics, the shipping, it is in a different place to where it was 10, 20 years ago. So I have to be more optimistic about all of these steps forward. And I think there is much more consensus around whether it's the Sustainable Development Goals, the need for an energy transition than there has been in a while. So I think, you know, for us who finance some of these projects or support governments and support the private sector, I think there's a lot more consensus about the road ahead.